Hey traders, it's Danielle, and today I'm going to talk about a new setup in Microsoft. So, if you look at Microsoft has pulled back after earnings, which was a little surprising because Microsoft normally does keep rallying after earnings, but I think in this case, this move was just so explosive. There's probably some profit taking, sold off, but then guess what it did? It went into a squeeze and it consolidated. And now we're getting something of a volume breakout. So, there's a couple different things I like about this chart. I mean, number one, it's Microsoft, so it's one of my favorite tickers and top holdings. But I also like how it's just today breaking out above that 50 simple with the squeeze plus the high volume. So I think this one's ready to go. I went ahead and started by buying some long calls in this thing. If you look at where the upside target could be, certainly back to the previous highs. So we have 540, which is a critical area of resistance. I would also say right around here too, just because we do have quite a bit of price resistance. So, 532, 540. After the previous high comes in, then we're looking at 575 and then 600. So if you want to come trade this with us in the trading room, make sure you click on the link below. Look at this high volume at the end of the day. How gorgeous is that? You cannot complain about this kind of move right here. Anytime you get this high volume burst right before the market closes, that is just people wanting to be in before the end of the day. And there's nothing bearish about that. So hope you have a good day, and I'll see you in the trading room.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.